Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are seeing the mid-cap index up around 0.8% at this point in time. We have the Nifty, which is just about consolidating, so above 25,000 as we speak. Well, in fact, above 25,370 as we speak for the Nifty. Advanced decline ratio positive as well. Joining us, we have Shahina Mukadam, independent market expert, and Vaishali Parekh, head of tech research at Prabhudas Lilladher, to answer all of the queries that we have today. Afternoon, ladies. Well, Vaishali, let's start with you. It's turning out to be a day of consolidation, but the mid-caps are going from strength to strength.
Very good afternoon, all of you. Yes, market has been celebrating. Yesterday, we saw a good new high coming in Nifty, and it was supported by all the banks, bank index as well as the other sectors. And now we are seeing good momentum coming in mid-cap. So overall, market is definitely in a buoyant mode, and yes, we are getting a lot of opportunities.
Okay, all right. And what about stock-specific, action? We have a couple of these insurance stocks which are lower. We have ITC, which is seeing some amount of profit taking today as well.
So I would say actually if ITC of course comes in the FMCG counter, so while the market was a bit uncertain, it was the pharma and the FMCG which was the front runner. So today we are seeing that there is some profit booking or a sideways move coming in pharma as well as FMCG. But well, you see IT sector has got into a new round of momentum. Banks are showing a lot of promise for an upside potential. So likewise, yes, metals have given a pickup. So I think it's a sector rotation movement, and these are the sectors that we would be focusing on right now.
Okay, all right. Well, we do have some queries now, so let's get going on that. We have Anil who writes to us from Ahmedabad. He holds 96,500 shares of Bank of India, which he's bought at 129. He's asking if he can hold the shares for another 12 to 18 odd months. So he's currently sitting on a bit of a loss at this point. In fact, quite a steep loss, you would have to say. So he's asking what to do with whether he should hold on to it. Shahina, what's your fundamental view on Bank of India?
See, the loss is steep, but at the same time, even the shorter term doesn't look like it's going to give you that good bounce immediately. While there does not seem to be any major issue, if you see in terms of valuation, price to book is just about 1.2 times, so it's not expensive. In fact, it's slightly lower than that also after this quarter. You have seen the balance sheet improvement. Net NPAs are now actually improving. They've come down. So to an extent, things are okay in terms of fundraise. Also, they have raised about 5,000 crores in the last quarter. So things are okay. But at the same time, I think if you're a short to medium term investor, doubtful that you're going to make too much money on this stock. So I would suggest you can book part loss and switch.
Okay, part loss and then switch. But switch to?
Well, you have some of the private sector banks, in my view, that in this volatile market, the overall market is starting to look a bit expensive. So there may be some volatility going forward in the next couple of months. And a lot of the private sector large banks have become quite attractive. Look at HDFC Bank, ICICI Bank. So I think it's better, safer to, partly park your money in these safer stocks, which in the long term are going to give you a very good return.
Okay, all right. What about you, Vaishali? What would your view be on Bank of India?
So I totally agree with Shahina. Right now, currently what we are seeing that there is a very good pickup coming, especially the private sector banks. But if time is not the worry, I think, overall the PSU banking stocks have shown a lot of weakness, but the index on the whole has retested the previous low. So I think in all likelihood, I think it may take a pause to the fall and we may see a run up coming. So if he has to hold this stock, I think there is limited downside because technically we see the stock which has fallen right from the recent high of 154 to now it is just coming out, trying to make an attempt to come out of its oversold zone. So even in a worse scenario, I don't see the stock falling more than 100. So 100 now acts as a prominent support, and I would say that yes, like everything is cyclical, I think this stock can give a good bounce, and maybe 130, 140 can be retested in times to come.
Okay, 130, 140 can be retested in times to come. All right, so that's the view on Bank of India. Well, we now have Mary who writes to us from Chennai. She holds 83 shares of KFin Technologies, which she's bought at 1,072. So she's sitting on a loss, wanting to know what she can do. She's a short-term investor, so she wants to know a short-term view on this particular counter. Vaishali, over to you on this one.
So KFin Technology, I'm looking at the chart. It was just in the trend is quite good. It has just gone into a minor profit booking to a consolidation, and currently where it is situated, 980 acts as a very good support, and today's candle shows a new round of momentum setting in. So I would say not to panic, but well, 980 should be taken as a stop loss. And I think the way we are seeing the chartical formation, this is very likely to go towards 1145 and perhaps even higher. So wait it out.
Okay, all right. So wait it out is what you're recommending on KFin. What is your fundamental target on this stock in any case, Shahina? Do you look at it?
KFin, in my view, for the shorter term, it looks like it will consolidate. I would say shorter term to medium term, given the fact that, the stock has rallied a lot, and you've seen, it's moving up it had moved up on back of the very, large number of IPOs that came out, the capital markets doing well. At the same time, if you look at pure valuations, the reason why I believe it will consolidate at around current levels is because if you see pure valuations, it's very expensive. Even if you take a 30% growth in revenues and EBITDA margins remaining constant, still you have, it is available at almost 12 times FY26 to the turnover, their EV, and EV to EBITDA is 30 times. So in my view, upside is limited for the medium term.
Okay, so the upside is limited for the medium term. This stock has done exceptionally well this year itself. It's up over 100-odd%. Maybe there's a little bit of rough weather that is hit at this point. We now have Geeta, who writes to us from Kerala. She holds 5,000 shares of Zomato, which is purchased at 250, and she wants to know the target price for this particular counter. Well, everybody wants to know whether this is the next portfolio stock to have. Shahina, so I'm going to toss it over to you to start with. What's your recommendation on Zomato?
I would say it's a good hold. I would give a target of about 330 1 year down the line. Basically, I'm pretty confident that they are going to show a very good growth in terms of revenues. They have also talked about something like a 20,000 crore revenue over the next 1 to 2 years. So I think that is achievable. EBITDA margins are expanding. So if you have an 8% EBITDA margin, overall numbers should start looking better, especially with Blinkit, which is expanding fast, moving into profitability. So all in all, being a concept stock, being a platform stock, which has got a very good brand and potential going forward, I would say it's one could continue to hold for the longer term.
Okay, all right. And what about you, Vaishali? What's your recommendation on the technicals for Zomato?
Yes, so Zomato, of course, it has continuously enjoyed a good upward move. But right now with today's candle, I think I'm a bit skeptical, because if we see today's low breaking, I think the recent high was at around 286 levels, and currently it is at 270 levels. So if today's low is broken, then we may see some more profit booking coming to 250. But however, having said that, it still doesn't damage the trend. So I would say 250 is a level to watch for. But otherwise, when I'm seeing the weekly chart, the trend is very much intact. We can look at a target of 300, 310 to start with.
Okay, a target of 300 to 310 to start with. That stock has done really well in the past 3 months odd. It's given returns of over 50-odd%. Now we have a query on Power Grid. Sudhir writes to us. He holds 500 shares of Power Grid, which he's bought at 335. So he's just about, probably breaking even with a little bit of profit on that. And he wants to know the prospects from a 3-month perspective. So he's a short-term investor. What would you recommend on this, Shahina? Because, I'll come to the short-term perspective. But on the fundamentals, that stock has rallied fabulously from 192, which was a 52-week low, all the way to around, 338 odd.
Yeah, I would suggest that you can continue to hold, but definitely hold with a stop loss. The hold is because they have got a huge amount of order book position, which is over about 1,10,000 crores, and they continue to get orders. I would believe the profitability will improve because you also have their capex that they are increasing. Earlier, they would do something like 12,000, 13,000 crores of capex annually, which they are now talking of increasing to 18,000 plus over the next 2 years. So to that extent, their returns also improve. So I would give it a hold with a stop loss.
Okay, a hold with a stop loss on Power Grid. What about a 3-month perspective on this, Vaishali? That was the original question
Yes.
where Pradeep is asking for a short-term view.
So right now we are seeing that the stock is making an attempt to bounce back, and if we only sustain about 340 levels, I think we can look for a target of 360 to 370. But if 320 on near-term levels break, then that could call for some further profit booking. So this is how he should take the call, because below 320 it would negate the view of a positive round right now. But above 340, if it sustains, we are looking at upside. So I think for now it's a hold.
Okay, all right. For now, it's a hold. That's on Power Grid. Well, for the markets, it's a bit of a flattish trend that you're seeing for the Nifty. The Bank Nifty also up around 0.3% at this point in time. What stands out is the outperformance from the mid-cap space. And if you look at specific stocks, Wipro is doing fabulously well today from the IT space. That stock, which has gained around 5% this week, is getting majority of those gains today, which is up around 3.6%. Bajaj Fin and Bajaj Finserv, both the stocks rallying away, so both those counters doing well today. And following suit is something like an IndusInd Bank, Tata Steel, TechM, Axis, LTI Mindtree. So it's really a varied number of stocks from different sectors which are seeing upside in today's trading session. But overall, the index is flat. There is profit booking on account of bigger stocks such as ITC, ONGC, HDFC Life, SBI Life, Adani Ports. All of these stocks a little pressured. We'll take a break, but more answers on the other side. Stay tuned. Welcome back. You're still tuned into Your Stocks. We have with us Shahina Mukadam and Vaishali Parekh to answer all of your queries. Well, it's turning out to be a day where we are seeing the mid-caps outperform and otherwise a flattish trend. Advanced decline ratio continues to be positive. Let's get in a query from Deepak, who writes to us from Bihar. He holds 5 shares of Tata Technologies, which he's bought at around 1,300 odd rupees. He's sitting on a loss. He's a long-term investor, wants to know what to do, whether he should hold or sell this particular counter. Vaishali, what's your sense on this?
So, Tata Technology right now, we are seeing that it's getting into a trend. I would say since he's sitting on a loss, he can average it out, because the way the stock is moving, I think I don't see any downside. 980 to right now, well, it's 1094. So the near-term support level lies at 1030. So I think that would be the support level. He can average it out, and the stock is getting into a trend, so he will get his rate again. So I would say definitely add more.
Okay, definitely add more. And what would your target price be on this?
Well, so to start with, because we don't have much of a data, because this is comparatively a new issue, but I would say that yes, 1250 is the first target, and above that we can have a relook. This can go towards 1350, 1380. That's where it began from.
Okay, all right. What about you, Shahina, on this particular stock?
Yeah, I would agree with the price targets. It's like a long-term investment stock in your portfolio, and near-term it is expensive. But what I believe is that it's in technologies of the future. Of course, as of now, while Tata is their main client, they're looking to expand their client base also, which would be a positive going forward. There's a lot of technology change that is happening in the auto segment, largely to which it caters. And here, I think Tata Technologies is very well positioned to take you from ICE to EVs, also in terms of various other capabilities that they have built in terms of robotic, etc. So I would say keep it in your long-term portfolio, and you can average at lower levels.
Okay, keep it in your long-term portfolio and you can average at lower levels. We now have Amu writes to us from Bangalore, holds 50 shares of Mazgon Docs, which is bought at around 4,800. wants to know whether to book her losses or to stay invested in this counter stock. The loss that she's sitting on is at around 22,000 odd rupees, so is asking what to do at this price. In fact, there's been a little bit of a profit booking which has taken place in a couple of these counters, but the overall theme continues to be this bullish defense theme. So from that context, Shahina, what would your view be on Mazagon Docs?
Yeah, actually, Ekta, we've seen this bit of correction in the shorter term last couple of weeks, and we've seen the stock correct to the current levels. Now, at this level, what I feel is that one needs to keep a watch. It could consolidate and then again give you a bounce. In terms of valuations, it is, of course, expensive. But also at the same time, the order book is huge. So also there is one more aspect to this is that the government holds 86% of the equity. So if you would like to book some profits, I would suggest keep a stop loss, book at a bounce, and then re-enter whenever you get an opportunity when the government comes out with further dilution.
Okay, and Vaishali, what about you on the stock?
I definitely agree. Actually, currently these stocks have lost its steam. Like right now, also just the recent high. The history says, I mean, we have seen a one-way rally right from 2000 levels, and well, the high was at around 550, 700. Now there is consolidation going on, but in all likelihood, this can again give a bounce back. But if 4,100 levels break, then there would be further weakness setting in. So for longer term period, I would definitely say hold on, because weekly chart, monthly chart, they are still showing an upward move. It's just a minor consolidation. But 4,100 should be the level to be watched. Below that, I would say exit. But till then, I would say hold on for a bounce back at least up to 5,100.
Okay, hold on for at least a bounce back to 5,100. So that's on Mazagon Docs. As you can see, the stock has given returns of 100% in the past 12 months. We now have a query on Exide. Akila writes to us from Chennai, holds 300 shares of Exide at 520, wants to know the future prospects of this particular investment, sitting on a loss of around 10,000 odd rupees. Why don't you go first on this one, Shahina?
So I would suggest, my view is to book your loss and switch. A couple of reasons. One is, in my view, it's price to perfection. 1 year forward, P is about 25 times. While the growth is reasonable, they are doing reasonably well in their current business. Lead prices are coming off, so numbers could be okay. At the same time, if you look at the longer term, most of the clients, the OEMs, the large ones, are actually having their tie-ups for EVs already in place. Or they're manufacturing it themselves for their new vehicles. So in the long term, I believe this whole sector will have to be reviewed. So in my view, it's better to book your loss and switch.
Okay, better to book your loss and switch. What would your view be, Vaishali, on this? Stock has given returns of around 50% in the past 6 months.
I would agree that yes, this too has really, there is nothing much happening. It's just a consolidation going on. But only positive view is that it is bouncing back. The RSI is bouncing back from its oversold. And I think since last 2-3 days, we are seeing some positive momentum, price value momentum. So I would say that now if you have to exit, keep a stop loss of 470. If this gets triggered, then please do exit. Otherwise, at least wait for a bounce up to 530.
Okay, all right. We now have Bhaskar, who writes to us from Kerala, holds 200 shares of Castrol, which is bought at 280, wants to know the prospects for this shorter term. Currently sitting on a loss, as you can see, so he's bought it at 280. Current price is around 258. What is your sense on this particular stock, Vaishali?
So currently, of course, it has corrected, and right now it is at a make or break levels. So if 250 levels break, then it's going to be a negative trigger. But till then, hold, because like all stocks, we have seen so many sectors bouncing back once again and getting into the positive territory. So I think Castrol also hold with a stop loss of 250 and wait for a target again of 280 to 300.
Okay, wait for a target of around 280 to 300. And what about you, Shahina? Your word on this?
See, it is possible that you could get a bounce after the numbers because the raw material costs are coming down. So you could see an improvement in EBITDA margins in the near term, and this could be a positive trigger for the stock to actually give you that bounce. But in my view, actually, in terms of growth, overall growth, it is growing in single digits. It is likely to be a market performer. So if you would like to book your loss, you could book it now or then wait for the bounce and then exit.
Okay, all right, Shahina as well as Vaishali. On that note, we're going to wrap up. Thanks very much for joining in and giving us all of your perspective. That's all the time that we have on the show. Leaving you with some market opinion that we got from Rahul Arora of Nirmal Bang Equities earlier this morning.
Still growing at 6.5–7%. That's still a remarkable growth rate by any stretch. I do understand our aspirational growth rate could be 8 to 9%, but at 6.5–7%, you're gold. I think add to that, when you're talking about interest rate cuts that you've seen, you are going to see a little bit more of the yen carry trade unwinding a little bit as we go forward. Earnings are going to be driven by top line. Everyone's cut employee costs, everyone's cut subcontractor costs. They've squeezed every bit out of margins from crude. You've built up low-cost inventory. India itself, when the Russia-Ukraine war started, built up inventory at 40, 45. Your growth has to be driven by top line, earnings growth as well.